What's going on, guys? I am Jackson. Thank you for tuning into this episode of Twin Finance. Today we're going to talk a little bit about tax credits versus tax deductibles. And if you haven't already, subscribe and like this video if you enjoy it. So let's start off right here with tax credits. So basically with tax credits, there's two different kinds. And then the one is there's refundable tax credits, refund, and then we'll put non-refund. So right here. So there's non-refundable and refundable tax credits. So a refundable tax credit means, say you file taxes and you owe nothing, but you have a $3,000 tax credit. That means the government is going to pay you $3,000 because it is refundable. But with non-refundable, guys, it gets a little more tricky because you can only use it to offset owings that you already have. So say you have a $3,000 tax credit, but you don't owe the government any money. Well, then the government's not going to give you that $3,000. You can only use it in instances where you say you owe $2,000. Well, you can use that tax credit to offset that completely so that you don't owe any money, right? So instead of owing $2,000, you just owe nothing. So say you don't use your non-refundable tax credit in a given year, you can carry it forward. I know in Canada it's 5 years, so you can carry forward that non-refundable tax credit. So say you don't owe anything this year and you didn't use it, well, you can bank it for next year. Say you owe $3,000, well, now you don't owe anything, right? Because you still have that tax credit. So tax credits, they're not too tricky, but you just got to know the difference between the two kinds, and then from there it's pretty simple. It's a dollar value, you get that back. Deductibles, they get a little more tricky because you have to bring in some like math aspects. It's nothing crazy, but they're a little more tricky than tax credits. So with a tax deductible is like, so say in a given year you made $50,000. If you have a $5,000 tax deductible, that means you can deduct that again, like off your income. So instead of making $50,000 in the government's eyes, you only made $40,000. That's taxable income. So it depends on your tax bracket, which is going to determine the true value of your deductible, right? So say you made, let's just keep it round numbers, like I don't know, like the tax brackets in whatever country you're viewing this from, but let's just say in this given country, someone made $100,000, right? And if you make this much money, you're in a 40% tax bracket, right? So if this person got a $5,000 deductible off their income, because their tax bracket is 40%, they're going to get 40% of this $5,000 back in tax season. So that's how it works. So they're going to get back $2,000 when they file their taxes. And deductibles are usually, it doesn't matter, like they're not like in this case where non-refundable or refundable. Like if you have a deductible and the government owes you that, like you get them. Like pretty much if you don't owe the government anything, they're still going to give you that $2,000 because that means they overtaxed you. Because in their eyes now, because you have this deductible, you didn't make $100,000, you made $95,000. So the government technically overtaxed you, so now they have to give you that money back. So it's not like in this case with non-refundable and refundable. So just keep that in mind, guys. And then also, if you have a lot of deductibles, like a lot of businessmen and business owners and stuff like that who have a ton of business expenses that they file for in the tax season, the good thing about deductibles, and a lot of people think like, wow, deductibles, they're not that good, you know, you don't, like if this was a $5,000 tax credit, well, you get $5,000 back, right? But with a deductible, you only get right around, like say in this case $2,000, right? But deductibles can actually drop you tax brackets. Like if they once you start to get a lot of deductibles and they really add up, like you could start tax season in 40%, and if you had $80,000 in deductibles, right, you'd be in a tax bracket where it wouldn't even matter, right? So like you'd end up making like minimal money on paper, and you would get a huge amount back in taxes, right? So just I'm not saying one's better than the other. Obviously everyone likes to not owe taxes to the government, like of course, right? But so yeah, this is just the key differences between deductibles and credits. So I hope you understand the difference between the two. Like I said, many people believe they're just the same thing, you know, deductible, credit, whatever, they're all in the same group, right? But once you understand the differences, you understand that they're quite different. So I hope you took value from this video. Stay tuned to the channel for more interesting videos like this one. Thank you for watching and have a great day.